Welcome everybody to our 26th episode of our Bay Area Housing Market Town Hall. So what is the mortgage rate today? For 30 years fixed, jumbo is 3% versus conforming 30 years fixed is 3.25. So the loan, larger the loan, you're actually getting a better rate at 3%. This was just pulled early today, December 8th. And as we talked about last month, that we are expecting the inflation rate to go up even more. We already have seen the inflation rate has gone up. But what does that mean? If you refer back into November housing market update, there's these inflation rate can actually affect the mortgage rates in the future as well. So we do expect the mortgage rates to continue to go up. Good thing is that this month, November, I should say, November mortgage rates projections is staying the same as the October mortgage rate projections. That's the good news. But the bad news is that it is trending up. So basically, the projection is still saying that the rate is going to continue to go up. So if you are, it's not too much. We are talking about 3.12% to about 3.5%. But then remember for the last few months that we had adjusted their projections. I should say they have adjusted their projections. So depends on what the Fed is going to do with the Fed rate, they can potentially adjust their projection as well. So I just want to remind everybody to think about that, because when you look at the inflation rate is going to go up, it's likely that the Fed rate is going to increase as well, and which in turn can affect the mortgage rate as well. What about home price forecast? Nationally, they are still thinking that from Fannie Mae, Freddie Mac, Mortgage Bankers Association, HPES, Selman, NAR, they are still expecting the home price continue to go up. It's not going to be double digits, but it's still going to be a pretty healthy appreciation. And in terms of in our Bay Area, I thought this report just came out on November 19th from the EDD, Employment Development Department, and they had shown that San Francisco County, their employment rate is at 3.9% and San Mateo County is at 3.6%, understanding that nationally is at about 4.2% currently. So we are below the national unemployment rate right now. And I also want to look at the rental situation. The one bedroom rents currently, as we see that we actually had some good news here, because if you look at Palo Alto, Sunnyvale, Berkeley, San Jose, Campbell, they had gone up quite significantly, double digits in terms of their rental rates compared to last year. Of course, last year has gone down, but then it seems like we have a healthy return on their rental rates. The most is at Sunnyvale and also Campbell at 15%, then Palo Alto, Berkeley, and San Jose at 11%. But the losers on the market right now is Menlo Park and Redwood City. Redwood City lost 6% compared to last year. Menlo Park reduced 4% from last year, while Oakland and Hayward only went up about 1%. And now this is a chart where you can see, starting from most expensive, San Francisco is taking the place still at $2,800 on average for one bedroom, while two bedrooms like $3,800. And then next in line is Mountain View at $2,760 for one bedroom and $3,260 at two bedrooms. Quite interestingly, we see that Concord is at $1,800, also had gone down 1.6%, but it did go up compared to last year for about 5.9%. And then their two bedrooms is $2,230, and they are ranked 19 on this list right now. We definitely see that the multifamily market inventory is so low. I know there are a lot of people who are still very interested in investing in multifamily because of the interest rate is low right now. And now the eviction moratorium has expired. A lot of investors have a lot more confidence to come out to invest. It's just the fact that there's not a lot of inventory. We thought a lot of people, I think everybody thought that a lot of apartment owners are going to sell, but they are really holding on to it. Yeah, we don't see a lot of inventory on the market, unfortunately. And if you're frustrated, don't worry, you're not the only one. This is a chart that I want to show you guys. You guys have seen, I put it on a kind of a spreadsheet format because, you know, we talked about the last peak, right, was in 2007, and then we want to compare to 2021. Now, if you I mean, if you have bought this property, I know back then you could have bought this property with 100% down. So that's even crazier. But let's just say that back then everybody was still using a 20% down. Honestly, I don't remember back in 2007, people actually put 20% down. I did so many 100% loans at the time. Um, and I've seen 105%, meaning that the bank actually give you money to buy a house. And then at the time there was like stated income, stated asset loans, which means you don't need to prove your income, you don't need to prove your assets, and you just tell them how much you make and how much you have in the bank, and the bank will take your word for it because they believe that all borrowers are honest at the time. So let's just say that you put 20% down, which is the minimum, right? That means for $835,000 single family, you put $167,000 down, while condo, you put $106,000 down. With the increase in the equity and all that, your appreciation is not just 93, your return on your investment is actually over 460%. And also, even you have a condo, it's over 300%. I think this is why real estate is so powerful, because it's not just looking at the property value, you're looking at how much you invest, right? Everything is based on what you have invested. So unless this is a stock, then you'll be like, okay, I bought this much with all cash, and then this is how much I made. But then with real estate, you actually can leverage. And this is so powerful when you look at it this way. And same thing for San Mateo County. Your down payment is only about $177,000. Everything's like less than $200,000 at a time. And your return on investment, look at this, single family for San Mateo, almost 570% return. And then even for condo, we talk about, oh, it's only 57%, but really your return investment is 285%. And then Alameda, again, same thing. If you look at return investment, 384 and 690% for condo and townhouse. This is really, truly the power of real estate investments on your own home, not really buying for rental or anything like that. I've been in the business for 16 years now. Still gives me goosebumps when I put somebody in the house and they're going to start building their equity in their home, where they know every single month their monthly payment is fixed. And that if the interest rate comes down, they will refinance. And just 2 days ago, we had done an event in Mountain View, and I just thought to ask around people, say, hey, do you know like what was the mortgage rate back in 2007, 2008? So many people say, well, it's higher than now. I was like, absolutely correct. And their answer was, I think it was 4.5, 4.75. They had no idea back in 2007, the mortgage rate was at 6.34%. It's double what we have today. And if just looking at the same numbers again, the mortgage payment back then on a $668,000 mortgage balance, your mortgage payment would have been $4,152 versus you had double your value and you're only paying less than $1,300. I think this is just crazy to look at it like that. So I think, yeah, it is really, if you were not in the real estate market back then, you don't appreciate how low our mortgage rate is right now. I remember I had one of the investment property, I had actually 7.5% mortgage rate. 3% is almost nothing. So be sure to take advantage of that. I mean, if you compare the mortgage payment for the condo, same thing, condo $1,178 versus $1,996 for a $700,000 mortgage. If the mortgage rate continues to go down, at least you bought it now, you can still refinance later. But if you miss this mortgage rates, you missed it, and that's it. You're not going to come back and get it again. So I've never seen, Teresa, have you ever seen the mortgage rate this low before at 3%? Yeah, I know at one point last year, we had a client who got 2.5% with like a few different discounts from the bank. And that's excellent mortgage rate. So yeah, if you can take advantage of that, be sure to do that. Let's look at San Mateo County. San Mateo County, same thing, $4,416. And then double, more than double the mortgage balance, you're definitely paying more, but you're not paying double the mortgage payment. You're paying about just 50% more, which is $6,400 per month. And then for condo, it's like $1,300 versus a 2,056. And this is about what, 14 years. 14 years later, you're paying that little more only. It's like $700 more. So and again, sorry, I know I'm like a broken record, keep trying to say the same thing, but I just want to show you guys the numbers over and over again. I thought this is even crazier when you look at Alameda County at 6.34%, your mortgage payment would have been 3,232
Mm-hmm.
and just $600 more. And remember, what was the appreciation for Alameda County? The return on investment is still several hundred%, right? And but then you're only paying $600 more on your mortgage payment here. And then condo, townhome, this is about $1,200 more for your condo and townhomes, but you get well over almost 600% return on investment. So hopefully this is interesting how these numbers work and how this might change the way you think about whether you should go into market or not. Because when I hear a lot of buyers worry about, oh gosh, I don't want to buy it at a peak and things like that, especially if this is for your own family to live in, I just want to say, don't time the market. I've seen too many people in my past 16 years, too many people time their market. They end up paying more just because like they didn't take action on it. I talked to someone else the other day and then they said like, well, never bought, we've just been renting, and they missed out on millions, a million, 2 millions of equity because of that. So hopefully this can help change the way you think about the numbers and think about what is the right way to do. But if you're investors, on the other hand, I'm not going to tell you to like, hey, just go buy, because if you're investors, especially if you're planning on holding short term, then you have to be really careful. And that will be a completely separate conversation.
Thank you so much for watching our YouTube channel. And don't forget to subscribe to our channel, like our videos, make some comments, because we're going to keep you posted on the most updated real estate news, housing market data, and also real estate tips and advice from all over the real estate industry. So thank you so much for watching, and I'll see you next time.